Hello, everyone, and welcome back to episode 37 of the Brainstorm. Today, I'm joined with Andrew Kim and David Puell. We're going to be going over Walmart potentially acquiring Vizio, as well as the ECB's campaign against Bitcoin. But first, let's start with Walmart acquiring Vizio, potentially acquiring Vizio. Andrew, why don't you tee this up for us?
Sure. So last Tuesday, Walmart announced its plans to acquire Vizio, which is a budget-friendly line of TVs. It offers a line of budget-friendly TVs and an operating system known as the SmartCast TV. And this would enable Walmart to more effectively connect with households across the U.S. Through its own proprietary line of TVs and more tightly integrate that with its native demand-side platform, Walmart Connect, which is its advertising unit.
Yeah, it's interesting that Walmart is getting into this space. The numbers here on Vizio, at least, Vizio has 18 million active accounts and around 500 direct advertising partners. This is what was disclosed in the press release. And Walmart is one of the largest retailers in the country and sells a significant amount of televisions each year. And they have made other partnerships in the space, notably Roku and their ON platform. So Walmart runs a brand of TVs called ON, ONN, and they use Roku's operating system to power that. Obviously, that is now being called into question. And I think Roku and the story behind Roku is being called into question by many. But I wanted to ask you, Andrew, what are your thoughts there? I have some opinions here, so let's go back and forth. Just what you think around the potential threat of Vizio and Walmart now entering in the CTV space, not just for Roku, but also Amazon, Google, Apple. You know, this is a very large industry and growing rapidly, and it's, you know, clear why Walmart wants to have a more significant presence in the space. But what are your thoughts?
Yeah, I mean, I think when Roku first announced its line of as first party like labeled TVs back in, I guess, January of this, sorry, January of last year, was it? Yeah. Like it basically signaled to us that Roku is like properly hedging and already thinking about hedging its risk to any single distribution partner, right? And Roku is on the shelves at various large distribution partners such as Target, Best Buy, Costco. And while Roku has historically depended on Walmart for the distribution of its budget-friendly smart TVs in the past, Roku's in a much better and more diversified position than before. So from a shelf space consideration, I think it's okay, right? I mean, yes, like Roku might lose shelf space to Vizio in Walmart, but it also begs us to ask, begs third-party distribution platforms to ask, now that Vizio is no longer an agnostic TV, right? It's now tied directly to Walmart. Will they carry it? Will Amazon carry Vizio? Will Target carry Vizio, right? Because it would put them in direct competition, favoring direct competition on its own platform. And I guess on the advertising side, scale matters, right? Roku has 80 million active accounts. Vizio chugging along at 18 million, which is still, impressive scale with a lot of data. And I'm sure Walmart was attracted to that. But in the aggregate, I would imagine that most advertisers are very much interested in continuing to reach the Roku household. So I think even from an advertising perspective, they're going to be okay.
Yeah, and I think you brought up a few interesting points here. One, just on distribution, and I think you're correct. It was January of last year at CES where Roku began to announce their branded line of first-party televisions, and that was originally in partnership exclusively at Best Buy. Now they've since expanded that, and so those first-party televisions will not only be sold in Best Buy, but Amazon and Costco as well. So they are, hedging their distribution risk in branding their own televisions, building their own televisions, and then distributing through other major retailers. And I think you're right to say that, one thing that has always attracted us to this story around Roku is this idea around the Switzerland and being that party within the CTV space that isn't tied to any single large tech company or major retailer. So when you talk about Vizio might gain shelf space in Walmart, but they're likely to lose out in Target and Amazon. I can't that is actually how the space has shaped up today, where Amazon Fire TVs are not sold in other major retailers because of the threat that Amazon imposes on them from a retail perspective generally. So there is that kind of awkward dynamic at play between these retailers and their sole solutions in the space. I think when we look at the story and what is really important to winning in the CTV space, and this is something that's largely talked about, it's you need scale, you need engagement, and then you need monetization. And we look at, who has the largest scale today. It's not Vizio, it's Roku, Amazon Fire. Those are the two major players. Then you look at engagement. If you look at the engagement hours on Roku, it's 100 billion plus hours streamed. So this is significant scale and significant engagement. And then you're talking about first party data and the advantages that come with it from a monetization angle. So I think the story really, makes sense once you have all three of those. And then just understanding the backdrop of the CTV space, this is still a very nascent space. If you look at some of the numbers we were given, and I'm going to read these off so I don't get any of the figures wrong. But one, you have this shift from linear into streaming happening at the current moment, and it has been happening at a faster clip since COVID. So we've heard about cord cutting, and now we're starting to see advertisers follow through as well. But during the fourth quarter, when we see global hours streamed on the Roku platform, that was up almost 21% and 63% for the Roku channel. But if you look at linear TV hours, that was down almost 16% on a year-over-year basis. So from an engagement standpoint, you're seeing this share shift. But then when you look at the amount of dollars being spent in these individual ecosystems, one, you have 60% of TV time now happening on streaming specifically, but only 29% of TV budgets are directed towards CTV and streaming. So there is still this large gap that needs to close between where the eyeballs are and where the dollars being spent are. And I think that's really important to understanding why we think this space is so attractive long term. The linear TV market is a $60-70 billion a year industry, and we believe all of that is going to flow over into the CTV space. But because CTV is built on digital rails, it allows you to personalize like social media companies. It allows you to target in a better fashion, more personalization, better targeting. Everything that comes with digital advertising is now being built in the CTV space. So not only is the opportunity just to cannibalize all of the dollars being spent in the linear TV space, it's what can you take beyond that into the digital advertising space? So growing market share as a whole, I think, is the longer term opportunity. And we think, just to settle this and give kind of the cohesive narrative, the TV operating systems, Roku, Vizio, Amazon Fire, they now sit in the same position that cable operators sat 2 decades ago, where they were the endpoint distributors for content. That means they're the gateway to your TV viewing experience. And that is a very powerful position to be sitting in because you can operate like an app store. So we think Roku, Amazon, Vizio, they're going to be operating app stores, and they're going to have similar take rates that we see in the mobile app ecosystem, but that's now going to be ported over into the television ecosystem. And so it's an extremely attractive opportunity long term. Obviously, there's a ton of risk, moving pieces, very dynamic space as we're seeing, right? Everyone wants a piece of this pie, because the pie is growing so quickly. And it's a massive opportunity from advertising and from just influence, being in the household, being the primary screen in the household outside of the mobile phone is extremely important. And so that's why you're seeing retailers like Walmart wanting to have influence here, and Amazon and Google and Apple. And it's, an interesting, case study here. Roku has been kind of the underdog story throughout this, because you've had tech giants like Amazon, Google, and Apple breathing down Roku's neck since the beginning of the story. And yet Roku has been able to edge all of them out and actually grow its market share, since its founding. And now it's in 80 million households, and it's the number one selling TV operating system for the last 5 years in the US. And its install base, and this goes back to the whole, portion on scale, it's larger than the 6 largest traditional pay TV providers combined. That's, we're talking about unprecedented numbers in terms of television distribution in the US, but this is also a global story, right? The difference between over the top or CTV is you don't have to go around the country laying cable to enter into homes. It is just, if you're connected to Wi-Fi broadband, you have access to everything that CTV offers. So it's an extremely large opportunity, because it's not just US, it's global as well. I know that was a lot.
No. I think you raised really great points all throughout, but branding matters, right? I hate that. I feel like the market discounts budget TVs as like a bare bones commodity. But if you look at Roku's advantage and leadership, as seen in the sales figures, right? Number one OS in 3 countries. It shows us that branding matters. The Roku brand is very much ubiquitous, right? And it's not as if consumers are completely nonchalant about deciding what kind of smart TV to purchase once they step into a store. And we agree with the notion that even if Walmart significantly decreases shelf space allocated to Roku in favor of Vizio, consumers will continue to look for Roku operating systems. And it's not just a branding issue, it's an overall operating system superiority issue too, right? In that the Roku experience is unmatched, I think, with respect to how other smart TVs operate. And I would encourage listeners to just search up Roku versus Vizio. Go to any subreddit, and you will see that people by far prefer Roku over Vizio because of all the issues that SmartCast has presented, whether it be connecting to external devices, doing like AirPlay or all these different services, right? Or compatibility with different streaming apps as well. It seems as though Roku is at a much larger advantage from a just technical perspective as well. So I would imagine that with this acquisition, Walmart is inheriting a lot of tech debt to consider. And I mean, we'll see how they execute, but I think they're in a much more disadvantaged position than I guess initial market reactions would warrant.
Yeah, and I think you bring up a very interesting point, and this is, I think, where we'll end and move over to David, because I want to be mindful of everyone's time. It is our thesis that the operating system brand, so the Roku OS, SmartCast, Amazon Fire, that now carries more weight with consumers than the television brand. So the OEM partner, so TCL is the Hisense, the Sharp, Philips, Samsung, and some of these have their own operating systems built in, right? Roku has its own first party, but then it also works with third party. That is a shift that we think has been taking place and is going to be where you see the real share shifts and winners is at the operating system level. It's the consumer seeking out, as you said, Andrew, seeking out the operating system, not the television, right? They want the Roku operating system. They want to see Roku City. They want that ease of use, navigation, UI, UX that comes with a sleek operating system. That is what we're going to see. It's, you know, it's been played out in mobile, right? People are very attached to the iOS operating system. You know, maybe it is also the hardware elements to it, but it is mostly the operating system, and we think that's now playing out in CTV. So I think, yeah, it's a very important point for everyone to understand, because this isn't what was happening in television before. It was, you know, an entirely different space, but this is now, we're bringing television into the digital age. So, David, we're going to kick it over to you. Tell us what's going on with the ECB. They're not fans of Bitcoin. What's up with that?
Yeah. So last week, the European Central Bank published the last of a series, or at the very least, the second of a series of blogs criticizing Bitcoin and its core value proposition. It kind of regurgitates the last blog post from November, and in essence, it bashes Bitcoin in three dimensions, you could say. The first one is claiming that Bitcoin is not digital money because it's slow. And in addition, it's used mostly, or at least that's the spirit of the blog piece, it's mostly used for criminal activity and money laundering. Then number two, Bitcoin is not a viable or a wise investment, given that it has no dividends, no cash flows, and if comparing to other commodities, it has it's a non-productive asset, right? And number three, Bitcoin, the consensus mechanism of Bitcoin, proof of work, meaning the mining use of electricity to protect the network, hash rate. Their claim is that this pollutes the environment and will continue to do so at an increasing rate into the future, given the historical rise of Bitcoin hash rates over the last 15 years. The post was highly excoriated and debunked on Twitter. It got one of the permanent commentaries on the original
noted?
tweets. Correct. It got one of those pretty much citing contrarian sources, perhaps even more valid sources on their overall claims. And it also goes to one of our own publications we published in mid-2021. It's called Debunking Common Bitcoin Myths. We already kind of addressed exactly this and a few other talking points that most skeptics have done on Bitcoin historically. Just to give you a high level of the way we at ARC see those, the counterclaim to those initial points given by the ECB. First off, we believe that Bitcoin still remains a censorship-resistant network, which is pretty essential, especially in developing nations that have no access to the proper banking system and to stronger currencies like the USD. Tackling the topic of illicit activity, as of the report of 2023 by Chainalysis, it's 0.34% of all crypto trading volume. It's estimated to be used for illicit activity, including money laundering. So in our view, that's extremely low, especially if you compare it to some estimations of how much cash, dollar cash, is used for illicit activity. I mean, you have the 2 to 5% estimated by the United Nations for money laundering, and that's just money laundering, not other illicit activity. And other much more aggressive estimations, like the one I believe it's Harvard economist called Kenneth Rogoff. He wrote a book called The Curse of Cash, where he, by a process of elimination, calculates that up to a third of the dollar cash in the world is used for illicit activity, where at the very least, just non-KYC activity, right? Meaning, tax avoidance, et cetera, et cetera. So by any standard, we think the claim is quite unimpressive and a little bit disingenuous in our view.
Mm-hmm. David, I want to ask you, we had Yassine on a few weeks back, and we asked him this question, which is, we hear a lot of these common Bitcoin myths and, these criticisms of Bitcoin and the network. Of those out there, what do you think is the most valid? And then how would you debunk it? In your opinion, what is the most valid criticism of Bitcoin? And then how do you respond when you hear it?
That's a great question. And I think the top two that have some validity, but on a longer term basis, one is Bitcoin is not private enough. Therefore, it may lose fungibility, meaning since you can track the transactions quite accurately, Elliptic and Chainalysis have such an infrastructure and know-how of how to track illicit or any activity in the network for forensics and on-chain archaeology at any given time. There's a scenario where increasingly so some of the Bitcoin may become quote unquote tainted or can be traded at a discount because it has been touched by an entity in Russia or Iran or North Korea. Now, perhaps the counterclaim to that is you would have a scenario where you wouldn't have that discount, or perhaps like a bilocated market globally where you have, let's say, U.S. allies or unsanctioned entities trading with each other at a normal price, and then sanctioned Bitcoin, we'll call it like poison Bitcoin, trading in its own ecosystem between the entities that are sanctioned by the US or something like that. Or even in addition to that, you have what is considered the poison Bitcoin, perhaps losing some value and staying dormant at the end of it, and therefore subtracting from the total supply and establishing through time a little bit of supply shock that makes it so that incentives, since that Bitcoin is pretty much tainted for all time, or at least until the US releases the sanctions, it becomes dormant and therefore not traded, and it's subtracted from the total circulating supply. Mm-hmm. That's one. And the other one is quantum potentially breaking encryption. Now, this is a topic for a much longer discussion, but in essence, the claim is, quantum is going to be successful in breaking Bitcoin's cryptography. Now, there's two vectors for attacking for a quantum entity attacking Bitcoin. One is the proof of work mechanism, or the mining side of things. In our view, that's very unlikely given the extremely high amount of hash rate that Bitcoin has today, and most likely will continue to have into the future. But even on top of that, there's mechanisms when you can enhance proof of work to have more resistance, again, a quantum miner. The other part is more worrisome, meaning the elliptic curve that is embedded in the signature scheme of Bitcoin, living by some estimates above 20% of the supply, including the Satoshi coins, and unprocessed transactions vulnerable to a quantum attack. Now, that's also, we expect, a little bit down the line into the future. And on top of that, you can also solve that in which the network could fork. We have enough time for that, and fork into a system that is quantum resistant, meaning instead of using elliptic curve as your cryptographic security, you use hash-based or lattice-based, most likely hash-based public key cryptography to protect the network against that sort of attack.
And then we'll end on this question. I want to flip the prior question on its head. What do you think is the least appreciated, or what does the market miss when understanding the potential of Bitcoin? So what is the least appreciated value that Bitcoin holds in your eyes today?
I know it's a popular aspect of Bitcoin, but I still think it's underappreciated, which is the monetary policy of it. It's disinflationary quality, and the way it keeps restricting supply from the system over a period of about 130, 40 years or so. I think this has impact in the asset and its adoption that people just keep misunderstanding to a great extent. They have no notion on how a disinflationary asset compares to an inflationary one, especially as a currency like the US dollar.
Interesting. Okay. David, Andrew, thank you so much. And everyone that has listened, tuned in, watching on YouTube, we appreciate it as always. That is our show. Sam will be back next week. But thank you, everyone.